Hey everyone, hopefully you're having a good day. My name's Andy. My channel's Finding Value. Today we're going to go through Twitter. We're going to hit it up, see what people are talking about, what the news is, what's being released data-wise. I'm going to give you a large dose of my financial opinion. It's going to be related to financial topics, commodities, and maybe wealth building, depending on what I retweet and what I would like to talk about. If you guys need help with anything, check out finding-value.com over there. You can use the word discount in the coupon code if you'd like to join. We do talk about individual companies and the way that I am playing this commodity bull market. Let's dive in. Let's see what's going on with all of this stuff. And again, if you want to follow me, it's at finding_finance. And the website is finding-value.com. 9.6 million crude draw is fake news when we can just sell more paper crude. So we've got EIA data week ending 6/23. Crude oil down 9.6 million barrels. SPR is down 1.4, Cushing 1.2. So big draw on crude oil. And let's hope it continues if you're long crude oil, which I think it will. Coming down, we've got copper. It says, we're headed for a train wreck here, Friedland said at Bloomberg's New York headquarters. He's the founder of Ivanhoe Mines. It says, my fear is that when push finally comes to shove, copper prices might explode 10 times. 10 times? Wow. So he thinks a big shortage is coming for copper. I think that there's a big shortage across the board of a whole bunch of different commodities. And we could see massive inflation over the next 10 years driven by supply. The weird part is, I don't know when that supply is going to come. I don't know if it'll ever come to the rate that what we think we can yank it out of the ground. I don't know if the renewables sucking copper out of the ground as much as they want can be fulfilled in the quantities that people want to build them. So we'll see what the price does. And I do think that it's positive for copper prices to go much, much higher over the next decade. That doesn't mean that it can't go lower in the short term. These guys that are billionaires like Friedland, they invest over long periods of time. So they see an opportunity. They foresee that copper is going to get into a tight supply-demand balance. And then they put millions, hundreds of millions, billions of dollars of investment into these large copper mines to take advantage of those market conditions. So he's got his finger on the pulse, probably better than most others. I've got here, it says, since gold was freely traded. So this is a response. Someone was tweeting something, and I wanted to respond to it. And my response was, gold is beating, it says, since gold was freely traded, this is what this one is, and gold is going to beat the S&P 500 going forward, in my opinion. So this is gold since it was freely traded. We see a large outperformance of gold versus the S&P 500. A large outperformance. Oh, no. We've got gold here. S&P 500 is slightly higher than gold, but gold's going to have a larger performance going forward, in my opinion. That's what it was. And then this is the reason why gold divided by the S&P 500, we are at a very low valuation. So all the money is in stocks. It's not in gold. We're waiting for those market conditions like shortages of copper, shortage of oil, shortage of all these different things in the markets, which is going to push and rotate money into gold and go into a very large bull market. This is going to take time. It's not going to be immediate. It's going to take like a decade. Be patient. Coming up, 15 visuals every investor should memorize. In the long run, stocks win. And that's what he was talking about. In my opinion, stocks are not going to win. They are going to get beat by gold heavily in the next decade with rotation of money towards gold. It's going to be inflationary. This guy taking it all the way back to 1800s, it's kind of an unfair advantage because gold was fixed all the way till 1971. If you take it from this point forward, gold doesn't look all that bad. And I think gold going forward is going to beat the S&P 500 based off of where it is value-wise. So that's my opinion. So Grady, he also has a similar opinion. He says, Said even before I called the commodities bear market low back in April of 2020 that we are in for the greatest commodities bull market ever seen, plus big destructive inflation. I do hope you have listened and neglected all of the talking heads plus made up mass media narratives. I agree. The charts support his viewpoint, which is how people are basically sizing this all up. The ratios agree. I mean, everything that I can find agrees with this. The market conditions of stocks and bonds being basically go down at the same time, that happened in 2022. It happened in 1969. It's right before big inflation and right before the changing of interest rates and all those things. It's the same market setup. So everything's in alignment for that to happen. We've got FUU. This is Fission 3.0. This is what Uselink is tweeting out. It's sitting on top of its pattern. What do I do on top of patterns? It's a breakout, retest. I buy the retest. Boom, gone. Boom, gone. We've got Eric Nuttall. Just wait for July and August. So this is our U.S. crude oil inventories. You can see that we are declining here. We had a big draw. And then the U.S. Big Three inventory deficit to the 4-year average. So this is the 4-year average going across. We can see that we've been declining the entire time here. And he's like, just wait until you see July and August. More deficits ahead of us. Massive decision coming up soon for silver. Signal only seen twice before in over 50 years. Yielded over 3,600% and 1,100%. This is JP Morgan priced in silver. He calls it silver's revenge. This is silver moved from 36.44 coming back down where it got repriced. This is JP Morgan divided by silver. So silver's outperforming as we go down. This is the price of silver on the bottom here. We are about to break. We broke to the downside of this sleep mode line. We're going to see a retest move, and then I think we're going to roll back over where silver takes off. And that's where silver is going to outperform. Gold's going to outperform platinum, all these different metals. So someone said this, something is seriously wrong with the mining business. It's not the business that's wrong. They are a commodity company. They sell commodities. They don't control the price of the commodity. Now, if gold was paper controlled, what would happen is gold would stay at a low level and the miners' margins would compress over time. So we're compressing over time as gold hasn't moved high enough to increase the margins of the mining companies. So there's nothing wrong with the mining business. There's something wrong with the price. And if manipulation were to occur and they were holding the price lower than what it should be, the cost curves would continually go up and then start to almost eclipse the price of gold. If that's the case, your mining companies would do exactly what it's doing here today. But when they lose control of gold, it's going to be a big move to the upside. That's my guess. And these guys could, since they aren't making much money today, if they start making lots of money, that's going to be a gigantic improvement over making no money. So they could go up thousands of percents because they're not making anything. And when you divide by not making anything, you get very large monies for your earnings per share. So it's a big opportunity. We've got Dr. Copper. Global exchange copper stocks sink to 15-year lows. This is global copper stocks are sliding in both China and the West. We can see that we are at very low levels here compared to history. And with Robert Friedland thinking where we're going, if this trend continues, we're going to see a squeeze in copper. We're going to see a squeeze in platinum, a squeeze in gold, a squeeze in silver, a squeeze in oil. All future squeezes of any metal there is going to eventually increase the demand for energy. All metals and all things that are produced by humans are a derivative of energy. Humans just create these designs and then we go and manufacture these designs. That manufacturing takes inputs. In order to get those inputs, you need to get a bunch of materials, which is all it's just a conversion of energy. Material is a conversion of energy, and all of the materials put together is another conversion of energy. So all things in this world, whether you eat it or buy it or whatever, is a conversion of energy. If you are posting on the internet is consuming energy. Your post is consuming energy. The things that you're typing on are all derivatives of energy. So when I see these large inventory drops and these large deficits out in the future of whatever it is, it's all these different types of metals and all this other stuff. It just means that prices can go up of the physical metal. The mining companies may or may not make more money. Difficult to say. Depends on the market conditions. And it's all future energy demand. It's all future energy demand. So the copper company, if you have a copper company, they're going to make money based off of the difference of their input costs and inflation costs and what they sell copper for. If the shortage is big enough and you're in the right locations, then yes, they are going to make gobloads of money. Logan Matashami, he says, remember, if we have an Airbnb bust, it will show up in the new listing data. So far in 2023, it is not showing up. The lowest new listing data ever recorded in US history. Let the data come to you first and let it stick with duration before the bust happens. There's a lot of people, they say, interesting with respect to housing and Airbnb. A lot of people are saying that there's going to be this big bust in Airbnb, which is going to impact the housing market. And I'm with Logan. You have to see it in the new listings. You have to see it in the data. You have to see it in the inventory. You got to see how this all works its way out. They're front running everything. They're too early. OPEC Plus exports at their lowest level since August 2021. Russian exports at their lowest level since December 2022. Iranian exports down 500,000 barrels per day. Oil price action allowing imaginations and narratives to run rampant, whereas the data and OPEC Plus cohesion couldn't be more apparent. Look at the data down here, guys. Way off the chart. You can barely see it on this chart here. So it's up here, and then boom. They're basically going to stranglehold the paper market through the physical market. They're just going to say, you know what, we're going to bring the inventories way down and push the price higher. And this is from yesterday. So that's where I've got for today the stuff that I was looking at. And we're going to stop it there. If you guys like the content, give me a thumbs up, subscribe to the channel, subscribe to the website. And that's all I've really got for today. So oil's tight. We've got oil that's very tight. I think a lot of these inventories are tightening up. We still could see a slowdown. We still could see prices go down if people are scared enough. I just think it's one big buying opportunity. That's what I think. But that's what I've got for today. We'll catch you later. This is Finding Value.